Good afternoon, everybody. It's a real pleasure to be another year with you here at CGI. A lot of familiar faces, new faces, and being among the people that really decide where the value lies in our industry is always very good. Thank you, Madison, for giving me the floor for starting this thing at the end. We share some way, somehow, a lot of same similarities on the way we propose our value proposition into the market. And for that thing, I think for decades, really, the way to measure value in our industry has always been space, range and speed. Where, how far, then how fast we can go there. Always that last nautical mile and that last knot of speed were the deciding factors on where the value lies in an aircraft. And don't get me wrong, I think we still, our customers value those two traits very, very much. But there is another way as well to add value and promote what the value proposition and the ultimate utility must be for the longer range aircraft you sell and operate. The ACJ family in particular is built on the most successful and a very strong Airbus family aircraft, and we do bring additional utility that we do believe that could be very interesting for you to know a little bit more about. Let me start with the big picture first. As Luis and the team, they were talking about the Brazilian market or the Latin American market before. Here in the US, for sure, undisputed champion, not even question about it. More than 15,500 planes flying right now. In our category, more or less 1,750, and those are long-range aircraft, ultra-long-range, and beastliners, both Airbus and Boeing. And the most important thing for all of us here today, this is an aging fleet. Roughly 870 of those planes are over 10 years old. So that gives us, all of us, a unique opportunity for business and upgrade and update those fleets. Why this urgency to upgrade? Well, we did a survey among US executives in large companies, asking them why they have this additional need and as well what they want to have in the next 5 years. And they really mentioned that business aviation is no longer a luxury. It's a true force multiplier for them to gain key efficiencies and deliver more value for their partners, their clients, as well as their employees. And there are three main blocks among all the bar charts that you see there. First, and you've touched base already, the tax advantage. At the end, with the new US tax law allowing to write off 100% of the value of the asset, that's driving market a lot. The other thing is productivity demand. More than 90% of those executives, they expect utilization to grow even more, and they as well are looking for more space and more real estate so their employees can travel in more well-being, including as well some shuttle configurations for employee transportation. And the third point is the efficiency mandate. They want newer models, more efficient, and as well that they can make larger use of sustainable aviation fuel. But the exciting part for, again, all people that we are here in CGI today is that they expect in the next 5 years, more than 96% of them, they expect to upgrade their fleets and update their fleets. And what they are looking for is very simple. They want newer models, they want better models, better value for money for their companies, and be able to reach where they need to be. And we at ACJ, we are very well suited to cope with all those points that they mentioned. Because the ACJ family, at the end of the day, from the game-changing ACJ 220 all the way up to the A320neo, and then the wide-body aircraft, we are very well suited to cope with large upsizing trend. We create aircraft, we create cabins where comfort is paramount for all passengers on board. And at the same time, as I mentioned before, we benefit from being derived from a very solid and robust family of airliners. And we do understand as well how productivity and flexibility is important for business aviation. And we are going to touch base later on the operating cost and the whole value or residual value of the aircraft. Let me dig a little bit more on the first 2 points, maybe speed or space and range, and then we'll go, both of us, Madison and I, on the operating cost savings. So Competitors, and when I say competitors, traditional business jets OEM, they've been growing their cabins a lot in the last few years. And they are still, let's say, they are masters of making narrow jets or narrow tubes longer and larger, but there is still a huge difference versus them and both ACJ and BBJ alike. So we believe that it's no longer luxury. It's not only the space for the sake of a space. It's not just A to B. It's providing them a flying office, an embassy in the skies. It's providing them their own flying apartment. And the beauty of that, and what I like to say all the time, is the beauty is on the inside. Because some may perceive that, okay, ACJ aircraft are very big. But yes, they are big inside. On the outside dimension, as you see there, a real picture taken in white planes a few years back, we are not that different compared to already the latest models in the ULR market. So the beauty of our airplanes are on the inside, but we are the use of the same RAM space, and we do keep the same operational flexibility as competitors in the space of the market. Is it enough? Well, no. Our customers, your customers, they want to reach their destinations. They want to fly where they need to be. As you see there, the maximum range of the ACJ family out of Miami, our longer range aircraft is the 319neo, 15 hours of range. And then on the 220neo or the 220, not the 320neo, is more than 12 hours of range. So really, we can go anywhere in Europe, Latin America, the Pacific, and one stop to the world. But again, it's not only how far we can reach, is that we keep that operational flexibility because our planes, they don't need long runways to operate, around 6,000 feet or less of balance field length. So at the end, your customers will keep that operational flexibility and not being forced to operate in large international airports like JFK, Miami International, or LAX. As you are well aware, for business aviation, for corporate aviation, users, they would like to keep up with their lives and get their business going at any given moment. And our aircraft are built on a very robust platforms designed to fly more than 14 hours a day and more than 5,000 hours a year. So that industrial foundations make ACJ aircraft a very strong, solid, and robust platform designed for rugged reliability. And you might be wondering, okay, 99.9 in there is a marketing gimmick. It is not. Last year, our fleet of more than 210 planes, we flew more than 70,000 hours, and we only have 3 AOGs. So in terms of reliability, in terms of being there for the customers where they need to, ACJ, there is no best testament for our customers on what we can do with our fleet. And now is really where the money talks, where the bulk of our joint presentation is going to lie. And I'm not going to talk a lot on the operating cost because really is where Madison will dive deeper a little bit. And the main 3 points are always the same. Why can we get those operational cost savings versus traditional business jets? We don't need an engine program. Our engines are designed to fly as many hours as I mentioned before. So for the utilization in business aviation, it's a walk in the park for them. Training, spare parts, very cost efficient. And when we factor all that in, we can get to not only double digits, but up to 30% running cost savings versus other ULR aircraft. And that's very powerful example on how efficient we are. But again, it's not only just the plane itself being very reliable, it's the whole network supporting them. We have more than 8,000 people around the world ready to support our plane. We have several spare part warehouses, including one here in Miami, training centers, people ready to support our ACJ around the clock, around the world with the utmost care for every single one of them. And I wanted to touch base a little bit on the value retention, maybe the other part of the financial proposition that we can offer in ACJ in contrast with traditional OEMs. Beyond those daily costs, really, you may ask yourself how we can protect that long-term value of their assets. And I like to call this the value retention trifecta. One is that we do have control production. Second thing is we do have consistency through evolution. And the third point is that our resale market or pre-owned market is very limited. So we are built to order, as a difference with other traditional business jets OEMs. So we don't have white tails at the end of the year that stress the market. So that means that all our planes and our customers, they are not stressed out to sell the planes, or we are not stressed to sell the planes, and therefore we help that way to keep the resale values up. The second leg is commonality through evolution, and this is really a contrast versus competition. At the end of the day, what we do is we invest a lot of money in R&D to make sure that developments done for the aircraft today can be retrofitted into the fleet that is already flying. So all our aircraft can be up to the latest standard. So at the end of the day, those aircraft, they prevent losing value from artificial obsolescence. And the third point, the last leg of this trifecta, as I was saying, is no excess inventory available. We do have 210 planes in service, more or less, as I mentioned before. As of today, only one is on market. So you see less than 1% of the total ACJ fleet in comparison with around 7%, which is available for sale worldwide on the long-range aircraft. So when we mix all those values together, and you see that chart over here at the back, there is a great proof of the past track record of the ACJ family. While most business jets might lose 6 to 9% of their value every single year, we are on an aggregate of 3%. So that's twice the value retention. When our customers, they buy ACJ, again, you are buying a strong, safe, resilient asset worth investing in. So as we are, or at least myself, I'm approaching a smooth landing of my presentation before handing over to Madison, the key question that we are trying, or at least I was trying to convey with you today, is how are we making sure that you maximize the long-term value and the long-term utility of the assets you sell and operate. Corporate private aviation, as you well know, is about maximizing time, making your customers simply run their business the way they want. And we know that money, or time is money, and money definitely talks. So the market is shifting. We see that trend changing. The ACJ family, again, is not only a competitor versus traditional business jets in the long-range, ultra-long-range market, or the other bizliner maybe here in the US, not that well known as my colleague here, but choosing an ACJ is far more than a plane itself. It's the supersized productivity and the increased efficiencies that come with it. And at the end of the day, that's the reason we are in business. So we can bring our customers where it matters, and a bit of style as well. So that's all from my side.
Thank you. I think I just keep going. Great. Thank you very much. So I just wanted to dig in specifically on the operating cost side that Luis talked about, because if I were to give the same presentation, it would literally be basically exactly the same, and that would be boring. So when he was talking about that 23 to 30% lower operating cost, he mentioned 3 things, and those are the 3 things I want to look in at. So a lot of people in the crowd, if you've ever been to a BBJ presentation before, you may have seen this slide, so I apologize for that. But essentially, what we see is that when you go from a super mid-size aircraft size to a large business jet to an ultra-long range business jet, your range increases, your size increases, your operating cost increases, until you get to the bizliner, and then your operating costs go down. And so why is that? Well, we know our aircraft are going to have more fuel. They're just bigger airplanes. They're designed for commercial operation, so fuel is higher, and some of those miscellaneous fees are higher because of like landing and ATC and what have you. But we really see cost savings in the maintenance costs and the engine reserves programs. So first, I decided for fun to show one example using an actual email that I received in my inbox, but this applies to lots of parts and maintenance labor across the industry. So this email I got is a used Citation right-hand windshield for $72,000. So for fun, I looked up the same part at the Boeing company. It was about $20,000. And we can see this across lots of parts, and the maintenance labor in and of itself, because there are roughly 8,000, less than 8,000, but about 737s currently flying. And there is an 85% commonality between the NG, the older generation commercial airplane, and the MAX airplane. So when you purchase a BBJ or an ACJ, you're not confined to the business parts or the business jet parts. You get access to the entire commercial infrastructure of parts, of labor, and of training, which goes to our next section, where if I'm wrong on this also, please somebody tell me. But I've heard from customers that for those ultra long-range business jets, their crew initial training is roughly going to be $250,000. While at the Boeing company, because we are serving not only BBJ pilots, but commercial pilots at the classic airlines that we all fly on, the initial course is going to run you closer to $75,000, and then recurring training will be closer to $20,000. A lot lower than those traditional jets, because they have to serve, or they were built to serve a different industry. And finally, something helping keep those operating costs down are the engine reserve programs. Now, I can talk about this for a while, so I'm going to try not to talk about it for a while and keep it brief, but if you have more questions about this, I'll be happy to answer them. But essentially, the engine reserve programs that a lot of the ultra long-range business jets are accustomed to don't really exist in the infrastructure of the BBJ, ACJ, bizliner world, because it's very unlikely that the first-time owner or second-time owner, maybe the third-time owner, maybe the fourth-time owner of a BBJ is ever going to see any time-off wing needs for that airplane, because the airplane was manufactured to fly like 30,000 flight hours before needing to come off wing. And in the commercial world, you know, that happens frequently, and the airlines deal with it. But if you're on the BBJ side, flying 400 to 600 flight hours a year, it's going to take you a while to even reach 10,000 flight hours for that thing to need to come off wing. And so, given that, our customers don't see the benefit of needing to invest in an engine reserve program if it's not going to need to come off wing for well over 10, 12, 15 years. And we even have some of the original BBJs sold in the late 1990s that still have yet to see time off wing. So they haven't had to go through this engine check yet. So all of that, oops, sorry, I should have clicked on the bullet points there. But all of that coincides or comes together to us looking at about a $2,000 difference in operating costs, which is what I showed you at the beginning. While the ultra long range business jets are running you sometimes anywhere from the high sixes to the $7,000 per flight hour, BBJs, ACJs are going to run you closer to $5,000 to $5,500 per operating hour. And that's where we see in the long-term value, the investment of a bizliner becomes much more attractive. We do have higher fuel, we do have higher acquisition costs, but we make up a lot of it in our operating costs. Okay. Are we doing, where's Alistair? Are we doing questions? Yeah? Oh, I do. Should I start throwing it? I'm not going to be as good as
Michael, I know he was
this morning.
Do we have any questions for Airbus or Boeing? You're offering a discount if someone buys today, aren't you?
I didn't say that. You can't hold me accountable to that.
Okay, no, thank you very much. That was great. Thank you.
Okay. I'm going to put this back. Oh.
Okay.